Today we're going to be looking at the week ahead, focusing on the Federal Reserve and the statement that they make on Wednesday. So it's Monday the 29th of April, and certainly when we look at the calendar for the week ahead, there's quite a number of events that will be very pertinent to how asset markets will behave and perform over the week ahead. All attention is certainly focused on the US, both because we have the Federal Reserve meeting on Wednesday and then we have the customary jobs report on Friday. Firstly, if we look at the Federal Reserve meeting, certainly no change to interest rates is expected. What we are much more interested in is the discussion from the Chair, Jerome Powell, but also from any other Federal Reserve governors as the week goes on, just looking at some of those factors that they're looking at to assess when they will be able to potentially reduce interest rates in the US. As you've heard from us over the past number of weeks, there has been quite a significant change in how interest rate expectations have been priced over the course of this month, with that move very much to the back end of this year. So for the first interest rate cut now priced for the fourth quarter, and significantly fewer interest rate reductions than that which was when we entered the year. Also, to Friday, we have the unemployment report. You'll also remember that over the past number of months, we've been discussing the strength of job creation in the US, some 800,000 jobs created in the first quarter. Recent survey evidence does point to a slight slowdown maybe in job creation, and certainly the report on Friday will look to see what comes from that. An unemployment rate of some 3.8% expected there. We'll also continue this week with quarterly reporting in the US. We'll hear from both Apple and Amazon rounding out the reporting from the Magnificent Seven, and we'll see how that plays through in asset markets. Turning our attention then to Europe, very much really about a number of reports on inflation and employment that we'll see this week, and also growth, to really get a sense of, well, one, how the economy is behaving, but probably more importantly, how the market will look to price interest rate reductions from the ECB and to some extent the Bank of England as well. I think it's fair to say that the divergence that we're seeing between the economic backdrop in the US and that in Europe and in the UK is suggestive that the ECB will likely move ahead of the Federal Reserve in terms of cutting interest rates. In Asia, we also have data from China, looking at the PMI data coming through there. We'll be looking to see whether we can build on that improvement that we saw in March. Some scepticism, however, about that, just given how the Chinese New Year fell and how that can distort data. But certainly it will be important to see if we are getting any momentum coming into the Chinese economy. I'll leave it there for today, but please do join us through the course of the week on Morning Markets.